the international investors would be a bit jittery as we approach elections. What are the foreseeable risks, especially now that we're also seeing some transitions in some countries, like in the US? In a few weeks' time, we're going to see, hopefully, the inauguration of President Biden. Yeah. And what do you see in your crystal ball, especially when you look at the stability in the eyes of investors?
I think we've been able to backtest the market all the way to 2002 to see what's the impact of elections on our market trading. And I can tell you it's not as high. I think investors are very aware that for a country to continue in its life, it has to do elections every 5 years. Mm-hmm. What do you look for? You look for, at these elections, do they have an infrastructure to ensure free and fair elections, mm-hmm. and to ensure that there's no loss of an extended dispute period? Mm-hmm. And that's what countries look for. That's what investors look for. And I think Kenya has been very aware that we've had challenges and are looking at addressing these key concerns of mm-hmm. a fair election and a delayed or disputed periods, and I think that is positive as we read in the papers mm-hmm. on what they're trying to do around it. But that notwithstanding, even despite those factors not being addressed, they normally price the political risk in their decisions, and political risk has never been top of the biggest risk. I think it's somewhere in the middle. What's the biggest risk for them is really the safety of their capital. Okay, what is your history as a country in terms of allowing private sector to operate freely? Are you the sort of country that would want to allow private sector to come in and tomorrow come with policies mm-hmm. that nationalize assets or create situations that threaten that capital? And I think Kenya has not been there. Mm-hmm. So they're fairly confident about Kenya. So that's why they would even invest in a very transitional election period. They did that in 2013, and we didn't see a big capital flight. Mm-hmm. And now I know 2022 is another transition period. But we don't anticipate a major capital flight because backwards they've always looked at what happened in the history, yeah. and they're fairly confident that this will happen going forward. Some of the things we've done in this market to just make that happen, they're happy to see progress mm-hmm. in the capital markets. They're happy to see new products. We have got 6 different categories of products today. The second market in Africa to bring a derivatives market. Mm-hmm. You can imagine, yeah. After South Africa. Mm-hmm. We are now having our exchange-traded funds, the gold ETF, very active. We have developed programs to support entry of SME companies into our platform. We are one of the only markets that have got very good tax incentives for both investors, because we don't have capital gains in tax, mm-hmm. we don't have exchange controls. Yeah. So one of the few markets that has really looked at capital markets positively to ensure that investors make good money and feel safe, and to ensure issuers are able to list companies. So I must say that the political risk, in my view, will not be a very major concern, and really we just need to focus more on showcasing Kenya. I think we just need to continuously sell ourselves loud and sell ourselves well, mm-hmm. so that more and more investors can come, because we are a bright spot right now in Africa, and we should take advantage of that.
Interesting. Yeah. And speaking about being a bright spot, of course, under your watch, we've seen the number of listings rise. The latest being Homeboys Entertainment, yeah. mm-hmm. a company that many Kenyans can identify with. And of course, the narrative right now is how can we further accelerate this and have more government companies listing, more privately family businesses listing? Are there sufficient plans in your master plan?
Yeah. So we are now in the end of our first year of our 2020-2024 strategic plan. Yeah. That's very aspirational. We are looking at focusing on growth of the market, increasing the market size. One of the aspirations we have as a NSC is to help our market achieve what you call an emerging market status. Right now we are a frontier market status country, doing very well within that category, but it's a tier 3. We want to go to tier 2 and join South Africa there.
Wow.
In that tier 2, we then attract even a wider pool of emerging market investors. Right now, we only attract frontier market investors,
Sure.
who are normally the third pool of capital that you can access. Once you go to emerging status, that positions us as a very strong player in the market and attract new investors to come in. For that to happen, we've had to invest heavily in infrastructure improvements, in our IT systems, in setting up a regulatory function at the exchange, in strengthening the Capital Markets Authority, in looking at the Capital Markets Act, and improving all these things. And we've done very well. And I must applaud the Capital Markets Authority, who are regulator, for really standing out and supporting us and the entire community to build in that direction. So, with all the incentives in place, and even the National Treasury with the incentives in place, I think it's about Kenyans, companies, and entrepreneurs being bold and taking advantage of the market. Today, we are really seeing our economy is highly SME driven, and we have got a platform here that incubates them, that allows them. And you've seen Homeboys has become the first graduate of that program.
Sure.
And I can tell you, they are now positioned for growth. They've opened themselves to scrutiny. They're going to have better governance in place, more confidence, more attraction, and more coverage from international investors. And sooner or later, they'll be able to raise capital pretty easily through the market because of that openness. And so this incubator program we've put in place called Ibuka is an attractive opportunity for companies to achieve that. And we're really hoping to see that pipeline grow and more and more companies. We've positioned ourselves to attract not less than 4 new companies listing in this particular segment next year.
All right.
And that's a bare minimum. But our bigger focus is going to be on the large corporates. There's no reason why companies cannot come and access capital markets. We've got bond programs. Even if you don't want to come and issue shares immediately, you can come and list a bond. And through the bond, you start operating like a listed company. And that helps you strengthen your governance structure, all aspects of your business, and even know how analysts speak to you. And that will then help you sequentially issue equity capital. So that's an easy start. And that's a messaging we want to have for our corporate private companies. As we look at other aspects, and we're really selling the governance story. One of the things that companies focus too much on is to raise capital. But you don't know the benefit of a good governance. Once you get your governance right, once it's open to scrutiny, once you're able to account for your firm better, you get better trading volumes coming through, you get better market share, more people trust your products, more people trust your messaging, and sooner or later, money then becomes cheaper for you to access. And that's the story we're selling to the private sector. Come to the market to help take your company to the next level. And so there's no reason why we can't see government listing more companies. If government lists more companies, it provides, it strengthens we call it, it catalyzes the market. It helps the market attract even private sector companies. And that's why we believe large corporates that government has at the moment could release about 10 to 25% of their volumes here. And that will help this market really move to the next level. If you looked at what happened between 2006 and 2008, we got close to 7 listings, with the icing on the cake being Safaricom in 2008. But what happened when Safaricom came, when all these companies came, you saw many private sector companies saying the market is right because the valuations improved.
That's true.
And so there's a case for every company to fund their balance sheet using debt and equity. We have also got debt and equity options here. We're not saying that don't go to the banks. It's important to have that mix. But you have an opportunity, because even the banks won't lend you if you don't have a sufficient equity capital. But if your balance sheet is not equity capitalized.
You have to have a good base.
You have to have a good base so that you can access debt. So there's a very big case for companies to raise money through the stock market, and we're really going to be out there educating them and really encouraging them to come through.
All right. Clearly, your work is cut out for you in 2021. And finally, Jeff, of course, you've been very positive. I'm sure there's that one thing that keeps you awake at night, especially looking at a time of uncertainty that 2020 was. 2021, what's your biggest fear so far, and how do we navigate through it?
The health crisis would still remain a really, really big fear, especially if we don't achieve what is set out for us. I think it has had a major macro effect globally, and any further escalation of this, like now you see the new strain and all these kind of things, that causes some level of pullback, and so for us that will still remain a challenge, and so we only hope that the treatment programs can run as fast as we thought. I was a bit worried when I saw in the US they had hoped to vaccinate over 100. I mean, they've already got 11 million vaccines, but only 2 million are vaccinated, which is a small conversion, and so that's a problem that I think would continuously affect our market. So if something like that doesn't stabilize, then there's nothing we can do. We'll probably also just be in the same boat. And for me, I think that's the most important thing we need to do now. How do we deal with COVID and any other virus strain that might present itself? Yeah, I think it's very important that we invest heavily in our health infrastructure, in our research programs, in our public health policies. I think those are important. I used to think public health was never that critical, but I can tell you what COVID has done has shown that investment in public health is extremely important, and so that's going to be a real area for us to keep an eye on.
All right. Correct. Well put. Thank you so much, Mr. Geoffrey Odundo, for speaking to us in our first edition of the Trading Bell in 2021.
Thank you.
Well, very loaded sentiments there from the Chief Executive of the Nairobi Securities Exchange, Mr. Geoffrey Odundo, giving us the lowdown of what to expect in 2021, and is quite optimistic that this will be a better year compared to last year. Well, from me and the entire team, we wish you once again a happy 2021 and keep it locked on the Trading Bell Show, only on KTN News.